All right, we are at the top of the hour here. Good morning, everybody, and good afternoon to those already halfway through your day. Thank you for joining me today, and thank you for taking the time to be here. I'm Manny Rosen, and I've been with Golden Care for just over 8 years now. I kicked things off in supplies and new business, moved through operations, jumped into marketing, and then last year stepped into the role of regional director. Every chapter gave me new ways to understand how to support you, our agents, and how to make your job smoother, faster, and just a little more fun. Today, we're going to dive into our full short-term care lineup, the whole toolkit. We'll hit the common threads, break down the key differences, and most importantly, look at how to zero in on the best fit for every client who lands on your desk. So let's jump in and get you even more confident with these products. Before we dive right in here, just a couple of quick housekeeping notes. First, if you haven't yet, be sure to check out GoldenCareAgent.com. Whether you're getting contracted or just exploring what's new, you'll find tools and products to help you grow your business. And if you're not contracted yet, this is a great time to jump in. There's no need to take detailed notes. We'll send the slides after the webinar. And if you need to step out early, don't stress about it. We are also recording this, and the video link will be sent out afterward as well. One more quick note, as part of the full extended care portfolio we offer, Jeff Clark will be hosting a webinar next Wednesday, the 25th, diving into our entire long-term care suite of options. This is on short-term care. He's going to go over the long-term care. So if you want the complete picture, short-term care and long-term care together, his session is definitely worth attending. Keep an eye on your follow-up email for that registration link as well. And with housekeeping covered, let's shift gears and talk about the support and resources you have here at Golden Care. So from our exclusive InstaPivot underwriting tool to our personalized underwriting concierge to the strategies and comparison platform and our full consumer marketing toolbox, everything we offer is designed to make your job easier and help you serve your clients with confidence. We also have a new discounted E&O package. Give us a call or visit our website for information on that. 800-842-7799 or goldencareagent.com. We are here to support you. Just a quick reminder, you are supported every step of the way, not just by me, but Jeff Clark brings nearly 3 decades of industry experience. And between Morgan and myself, we've spent the last 10 years helping agents succeed here at Golden Care. Whether you're looking for the product insight, help shaping a case, or someone to bounce ideas off of, our team is always in your corner. And on top of that, our in-house marketing crew can jump in with custom pieces, lead generation support, campaigns, the whole works. You've got an entire team behind you, ready whenever you need us. And at Golden Care, our commitment to the senior extended care market is stronger than ever. We've always pushed for innovative plan designs, from Mutual of Omaha's custom solutions to teaming up with Manhattan Life on OmniFlex, a standout in today's short-term care space. And with the newly updated Aetna product added in, that brings us to 7 short-term care options total. That kind of variety lets you pivot between price points, health profiles, and coverage goals without hitting dead ends, especially when traditional long-term care isn't a fit. Whether you're working with a healthy 55-year-old or someone in their 70s who needs a more flexible approach, you'll always have a solution in your toolbox. Our goal is simple: help you match every client with coverage that truly works for them. The market has shifted, and it's still shifting. Traditional long-term care has narrowed down to just a few main players: Mutual of Omaha, Thrivent, and National Guardian Life. Genworth is just getting back into it with CareScout. But with fewer carriers and tougher underwriting, a lot of clients end up without any viable option. That's where short-term care steps in. The short-term care market is growing fast, with new products expanding benefits and easing underwriting. It offers coverage in many of the same care settings as long-term care, but with lower premium and much more accessible qualification paths or underwriting. Very simplified. Bottom line, more of your clients can now get meaningful coverage and actually afford it. So how can short-term care help save this industry? Traditional long-term care policies come with long benefit periods, 2 years at minimum, and they can stretch to 3, 5, even unlimited benefit periods. That creates a huge exposure for the carriers. Short-term care limits coverage to a maximum of 2 years, which keeps individual risk manageable and predictable. With long-term care, inflation can hit a block of business hard, and catastrophic claims can ripple across the entire carrier portfolio. Short-term care avoids those massive shocks. The benefit period is capped, so the impact of inflation and long claims is contained. Underwriting is another major difference. Long-term care requires a deep health history, exams, interviews. It can take months. Short-term care uses simplified underwriting, usually just application questions, which opens the door for many more clients to qualify. The applications themselves are also night and day. Long-term care paperwork is long and slow. Short-term care apps are simple, fast, and often issue in 24 hours, sometimes instantly. And while long-term care requires special certifications, short-term care is flexible, budget-friendly, and doesn't require any added credentials like partnership training. Bottom line, short-term care lets us go back to the future, serving the clients we used to place in long-term care, but doing it in a way that works in today's market and keeps this industry moving forward. Now, let me ask you this. Would you rather receive $144,000 in 1 year or that same $144,000 stretched out over 3 years? It's pretty easy. I'd want it in 1 year. But that's basically the difference we see at claim time between short-term care and traditional long-term care. Traditional long-term care usually requires a 90-day certification period before benefits can kick in. That waiting period can really delay support, especially during a crisis. And here's the kicker. 70 to 80% of long-term care claims end before 3 years. Most claims don't come close to those long benefit periods that people are paying for. Short-term care changes the whole experience. There's no 90-day certification on claim, and benefits can start flowing right away. Clients get access to their benefits quickly when they need it most, not months later. It's faster, it's simpler, and it lines up far better with how real-world claims actually look today. Short-term care absolutely deserves a seat at the big boys table. I love this slide. We use it a lot. It really illustrates that point here. It's not at the little kids table. It delivers the same major care benefits people expect from traditional long-term care, home care, assisted living, skilled care, nursing home, but in a shorter, more adaptable benefit package that fits how clients actually use their care today. It's streamlined, it's capable, and it fills a space the larger plans can't always reach. Short-term care isn't looking for permission, it belongs at that table. Now, let's get into the short-term care products. Here's a look at our full lineup of these short-term care products in our portfolio. We've got OmniFlex with Manhattan Life, a product we were heavily involved in designing, leading the market today, plus the Essential Care from Wellaby, Recover Cash from GTL, Recovery Care with Aetna, Choice Short-Term Care from Cigna, and Vantage Recovery from Bankers Fidelity. And the best part, we're still expanding. More short-term care solutions are already in the pipeline, giving you even more ways to match the right plan to the right client. And the newest update to this lineup, Aetna has officially rolled out their Recovery Care Choice plan, their refreshed short-term care product. It launched on February 10th and is now available in 24 states, with more approvals expected as the year goes on. We'll go into more detail on this new Aetna product and all of our short-term care options as we move forward. So here's the state availability for the old Aetna Recovery Care plan. You can still write the old plan in all the states where the new plan is available until May 6th. And then when they release in the new states, I believe you get a 2-month grace period to continue writing the old plan before they cut that off in that state. This next map here, here are the new states for the new Aetna Recovery Care Choice highlighted in light purple. 24 states, like I said, so far. Illinois, Mississippi, North Dakota just opened up on March 13th. And I know they have at least 3 or 4 more planned for April. So keep an eye out on that. That should be getting updated here shortly. Bankers Fidelity, this is their availability map, 27 states. I don't believe they're looking to add any more. We haven't heard as much. You'll notice as we go through all the state availability maps, some states are going to be empty on all of them. Florida, California, Washington, Minnesota, New Jersey. Those states, the departments of insurance, they put up a lot of roadblocks that make it really difficult to file short-term care plans. We are working on that. Cigna short-term care plan, it's available in 18 states. I don't believe they're looking to expand any further than that, at least in the immediate future. They've kind of turned their attention from short-term care over to Medicare. And then GTL's Recover Cash, another staple in the market, 38 states. I don't think they're planning on adding any more, but GTL likes to always surprise us. And then OmniFlex, the market leader, also available in 38 states. I know they are always working on adding more states. The states that are left here are such an uphill battle. It may take some time, but we are always working on it. Don't worry about, we're going to send you the slides after this too, so don't worry about taking screenshots of these availability maps. You'll get them after the presentation. And then Wellabee's product availability, 24 states. Same states that are missing off, Florida, California. So just a little variety. And then to have it all in one spot, all the products in one place. Not only are you going to get the slides, but InstaPivot can do a search for state availability, and our team here can also tell you what's approved in your state. So if you need to, give us a call and we can help out with that. So let's get into some plan basics and the benefit information. That's what everybody's been waiting for. All right. So as we're moving through the plan basics section, there's a lot of information. So remember, these slides are meant to give you a quick high-level look. You don't need to write anything down. All of this will be available for download afterward, and you'll also get a one-page PDF that summarizes every key feature side by side that we're going over today too. So for this slide, the big thing to pay attention to is with the short-term care underwriting. It's driven almost entirely by health questions on the application for all the products and the medications tied to those conditions. That's the foundation across all short-term care carriers. Some carriers will do a quick phone interview, and others only make that call if something unexpected shows up on the prescription drug screen. But overall, underwriting is streamlined and very approachable. Another thing worth noticing, there are 3 carriers on this chart that do use a build chart where height and weight is factored in: Wellabee, GTL, and Cigna. And that can be a major limiting factor depending on your client's height and weight. So it's something to keep in mind as you're comparing options. Again, don't feel like you have to memorize this. We will give you the whole chart after this is over. On this page, there are really 2 things worth calling out. First, the issue ages. These ranges are all over the board, so depending on how old your client is, some carriers will automatically move to the top or bottom of your list of choices. If you're working with younger folks between 18 and 30, maybe they want to get in front of it, you're going to be stuck with Cigna or Bankers for your options. They go down to 18, and the rest start around 40, OmniFlex at 45, and go up to the 80s. Second thing on this slide is the benefit type. Most of these plans are indemnity based, which keeps the payout simple. They're going to pay you your full daily benefit amount no matter what the charge is. But Bankers Fidelity is the outlier here. It has a reimbursement model, so just know that going in. And here on this slide, a pretty quick slide, it looks like a lot, but all these plans use the exact same claim triggers: 2 out of 6 ADLs or a severe cognitive impairment. So that part's consistent across the board. The next section shows premium modes and loads. Annual and monthly are clean for most carriers, but GTL is the outlier there. They actually add a small load to every mode except annual. Some of the other carriers also have small quirks in the semi-annual or quarterly modes, so just watch those if a client prefers paying one of those in-between modes. And down at the bottom, you'll see the policy fees. OmniFlex charges a one-time $25 per applicant fee. GTL charges $25 annually per insured. And the Bankers Fidelity has a one-time $25 fee per applicant as well. Everybody else is fee-free. So the big picture here, same claim trigger for everyone, minor differences in the premium modes, and just a few carriers with small application fees. All right, benefits time. This slide is strictly the facility benefits. We'll handle the home health care benefits on a separate slide. So a few things jump out right away. The daily benefit ranges. Every carrier lands in a different spot here, so this is where you can really dial in the right daily amount for your client. Aetna's new choice plan has the strongest facility daily benefit since they increased it to $700 a day. It's definitely worth noticing. Wellaby's Essential Care Plus goes up to $500 a day and OmniFlex $400 a day. I would say those are the three strongest on here for the daily benefit amount. The benefit periods, they're pretty similar across the board with several length options depending on how long they want the protection to last and what their budget is. 90, 180, 270, or 360 days across the board except for Cigna. Only offers 180 or 360. Elimination periods, lots of flexibility, and it's another knob you can turn to fit your client's budget. We always recommend 0-day elimination on these plans. It's very affordable. Because of that, there's no 90-day certification on claim, you would want that benefit to start on day one. You don't want any elimination so you have access to those benefits right away. Lifetime maximum. Remember, this factors in multiple claims. These plans can last up to 2 times the selected benefit period. So clients are not done after one episode of care or one health incident. We'll talk more on this when we go over the restoration of benefits because that's how you access that second pot or up to 2 times the benefit period. And then bed reservation. This is definitely worth calling out. Wellaby, OmniFlex, and Recovery Care Choice all include bed reservation. Families love this, especially if someone needs to leave the facility temporarily and come back. If they're in a nursing home, they fall, they sprain or break something, they need to go to the hospital for 5 days. These plans that have the facility bed reservation will pay to reserve that bed even if they're not in that facility at the time. So, and again, this is just the facility side of benefits. The next slide here, we'll look at home health care benefits. So shifting over to the home health care side, and you'll see the benefits closely mirror what we just looked at on the facility side, but with a few differences between carriers that are worth calling out. The first big one is right at the top. Some carriers pay daily benefits and others pay weekly for the home care. With the weekly benefits, you'll notice they require at least 3 visits per week for that full weekly amount to be paid. And a quick note on Cigna, their home health care benefits start at half of whatever you choose on the facility side, and then it doubles to match if you select the home health care boost rider. Just a weird design that they chose, how they build in their home health care benefits. There's a range of options provided for benefit periods, but for the weekly paying carriers, those periods show in weeks instead of days. So 26 weeks or 52 weeks for the Recover Cash from GTL, Recovery Care Choice, 13, 26, or 52 week options instead of the 90, 180, 270, or 360 day. The home health care elimination period differs slightly between all the carriers, 0 or 20 days mostly. We always recommend 0-day, especially on the home health care side of these benefits. If something happens, you want access to those benefits as quickly as possible. And just like the facility care, the home health care side also has that lifetime maximum up to 2 times the selected benefit period. So clients can use this across multiple episodes of home care with restoration of benefits that we will talk about soon. All right, so this slide's a nice and quick one. There's only 2 carriers in our lineup that offer the hospital indemnity benefit: Manhattan Life with Omniflex and Aetna with Recovery Care Choice. If it's available, it's a great add-on, especially for Medicare clients. It helps cover those deductibles and copays that don't normally get picked up anywhere else. So when you see it, it's definitely worth considering. It's a very affordable add-on, especially if you're considering purchasing a separate hospital indemnity plan. It's not a bad idea to stack those two, but this is a very affordable way to offer this kind of protection. All right, this slide highlights some benefits that don't always get talked about, but they can make a huge difference for families. First, hospice care. Omniflex is the only plan here that covers hospice in both facility and home settings. It's something none of us want to think about, but when it's needed, having it covered is a huge relief. Next, the cash benefits for family or friends providing care. This is where Omniflex really stands out. Their built-in Fast 50 benefit pays 50% of the available benefit as cash on day one, the strongest cash option in the lineup. Aetna's new Recovery Care Choice now offers a cash option too, 25% of the weekly home health care benefit if family or friends are providing the care. And that's a big improvement from their previous version. It didn't have a cash offer, but still not as strong as the Omniflex. GTL takes a different route with a one-time $3,500 family caregiver benefit through TCare. It can be restored with restoration of benefits, but it also comes with some training requirements. There's a hotline you've got to call into. There's a process to be registered with TCare to receive that payment. And then Cigna Choice adds a unique transition benefit, up to 10 days of immediate home health care while professional care is arranged. So that kind of acts like a nice bridge for families when things start moving quickly, something happens, they need care right away, money right away to pay for home improvements, possibly a railing, a ramp. It's a great little benefit that Cigna offers. This slide has a lot going on. These are the optional riders. We're at a high level here. We'll kind of go over what you need to know. So with the optional riders, I'm not going to run through every single one on here. You can see them on the slide and they're all laid out in the handout you'll get. But I will say this, Aetna really loaded up their new Recovery Care Choice plan with some nice bells and whistles. They do come at a cost, but they're absolutely marketable, especially things like the pet boarding rider. If somebody needs care, they're always worried what they're going to do with their pet. It's a great little add-on. So be sure to check those out in the handout. And on this slide, the part that I do want to call out is the inflation protection column. So Omniflex offers 5% simple inflation, and it inflates everything: facility benefits, home health care benefits, and the cash benefit, which is based on the home health care benefit. Until the benefit amount doubles, it inflates until the benefit amount doubles, and then it stops growing. It's the only plan that will inflate all benefits. Wellaby Essential Care Plus uses 5% simple and grows both the facility and home care benefits. GTL offers 5% simple or 5% compound, but only on the facility benefit, not the home health care side. Aetna's Recovery Care Choice offers 3% or 5% simple or compound, but again, facility only. Think about that though, 5% compound interest on a $700 a day benefit. That can grow to be a huge benefit. Yeah, that's unbelievable thinking about that. Cigna Choice offers 5% simple on both facility and home health care. So the inflation column is where these carriers really separate, and depending on how your client wants this plan to work for them, that detail matters. All the riders are listed in the handout again, so take a look through those later and reach out if any of them look like they'd be a good fit for your clients. I'd love to run some quotes, drop some illustrations to help you out with that. Now, restoration of benefits is really where short-term care starts to shine. This goes to the 2 times the maximum benefit period. that we were talking about earlier. So with long-term care, a claim has to last at least 90 days before it will count, before it'll pay out benefits. That's the 90-day certification on the claim. But with short-term care, that's not the case. Even a short claim, like a 30-day rehab stay after a fall or a car accident, will pay as long as the client meets that 2 out of 6 ADL requirement. Once the client recovers and stays off of claim for 180 days, the policy restores. And this is where the carriers start to separate. Omniflex and Aetna's Recovery Care Choice are the standouts here. Anywhere you see multiple times in red, that means the plan will keep restoring benefits over and over until the client reaches the full 2 times the lifetime maximum. So multiple small claims, no problem. The benefit keeps coming back. But with Wellaby, GTL, Cigna, and Bankers, you only get one restoration. If a client uses that restoration on a minor claim, that's it. They're tapping into whatever's left going forward. And that's where clients sometimes start asking themselves, is this small claim worth burning my full benefit period? If they have 360-day benefit period and they only have a 30-day claim, is it worth burning that full 360-day benefit period? We don't ever want clients to feel like they're gambling with their coverage, and that's exactly why Omniflex and Aetna shine. They give your clients the confidence to submit their claims when they need to without worrying about losing long-term protection. Very powerful benefit. This one's pretty simple. Aetna took a page out of Manhattan Life's playbook and added the prescription drug benefit to their new Recovery Care Choice plan. So now Omniflex and Aetna are the only 2 carriers in our short-term care lineup that offer it. It pays $10 for generic and $25 for brand name medications with a $300 annual maximum. It's a small benefit, but clients really like it because it helps with everyday out-of-pocket costs, and it can even be looked at like a premium discount, $300 off of their premium every year. Below that, you'll see the care transition benefit. We already talked about these earlier. These are like the cash benefit. Omniflex has the Fast 50 cash benefit. Aetna has the friends and family cash benefit under their home health care rider that pays 25%. And Cigna offers up to 10 days of immediate home health care while professional care is arranged. Now, when it comes to discounts, here are a few that really matter. Omniflex offers a 10% spousal discount when both are insured. Even if they apply at different times, they will add that 10% in later. Wellaby gives a 7% discount if the client is married and they submit one application, 14% if both spouses purchase a plan, plus an extra 5% if they also have a meds up with Wellaby. Those stacked discounts really add up. GTL keeps it simple with a 10% discount when both are insured. And Aetna's older Recovery Care didn't offer anything, but the new Recovery Care Choice adds a 15% multi-policy discount, which is a huge improvement and very marketable. They're including short-term care, final expense in that, and Medicare supplements, I believe, for their multi-policy discount. So if you're working with couples or clients with multiple policies, these discounts can really make a meaningful dent in that premium. All right, here's a quick premium comparison using a really clean middle of the road plan. This example uses Arkansas rates for a 61-year-old non-tobacco client with a $200 daily benefit for 360 days on both facility and home health care. 0-day elimination periods across the board. What you'll notice right away is that Omniflex is by far the most affordable option. And depending on how you build it out, it's arguably the most bang for your buck. GTL, Aetna, and even Wellaby all come in noticeably higher for the same basic design. So price-wise, Omniflex consistently leads, especially when you're comparing plans apples to apples. And you'll also see the RX reimbursement line. Once you factor in that $300 prescription piece with Omniflex or Aetna, the effective premium drops even further. You see that there in red. So this gives you a quick feel for where each carrier lands on price for a very standard, very common benefit setup. If you have something that you want to run yourself or a client you're working with, give us a call. We'd be happy to put together a side-by-side comparison. And that's what we're going to show on this next slide here. Stratecision. Now that we've wrapped up those plan comparisons, let's talk about the tool that makes this all really easy to work with. Our contracted agents get exclusive access to Stratecision, the quote and comparison tool I mentioned earlier. It lets you run quick side-by-side comparisons of all the short-term care products we covered today. The only exception right now is the brand new Aetna Recovery Care Choice Plan. That one isn't quite yet in the system, but we are working on it. Everything else is ready to go and quote in there. If you need help quoting the new Aetna plan or any other plan for that matter, just give us a call. We're happy to help. But Stratecision is a fantastic way to show clients their options and visually compare benefits, pricing, and structure. And you can access Stratecision right through Agent Corner at GoldenCareAgent.com. You see on that slide, that's what the printouts look like. Across the top, you see Manhattan Life. It shows you all the companies and all the plan design side by side. It's a great system, great tool. Can even be submitted with your application if the client carrier is requesting a quote. It's not carrier approved, but most of the time they will take it. The quotes are accurate on there. Next up is InstaPivot. This is honestly one of my favorite tools we offer. It's our underwriting comparison tool built to help you quickly narrow down the right short-term care product for your clients with health conditions. Instead of digging through a stack of underwriting guides, everything is in one searchable place. You can plug in a condition, a medication, or run a state availability check, and InstaPivot instantly shows you which carriers are a fit. It also includes marketing materials, product details, and even a full medication search. And just a heads up, it also lists the home health care only plans we didn't really talk about today. So you'll also see those in there and be able to run your client's health conditions against that. So whether you're building a case or just checking which carrier is most likely to say yes, InstaPivot gets you the answer in seconds. Let me show you how this works. And we're not going to do it live. I made some slides for it, but let's show a couple examples here. So here's a quick example. In this case, we selected Iowa, and you'll notice that every product across the top turns green here. That's InstaPivot's way of showing you which plans are available in that state. On the previous slide, everything was blue because no state was chosen yet. Once you pick a state, the available plans highlight in green. So I'm talking about right here, the plans are in green here. Once we selected Iowa, on the previous page, they're all blue. This is what they'll start out as until you select your state, and then they'll turn green if they're available there. For this client, we typed in Parkinson's into the health condition search bar. That filters the results below, so you're only looking at the Parkinson's specific underwriting guidance. You can see two rows here, one for stages 4 through 5 and one for stages 1 through 3. For stages 4 through 5, the only viable options are the home health care only plans. And for stages 1 through 3, OmniFlex will allow the limited benefit plan, and that's why you see the green check mark here. A green check mark means it's okay to submit an application with that condition, and a red X means the carrier will most likely decline. So with one quick search, InstaPivot narrows down exactly which products can take this client based on state and condition, instead of you having to dig through all those underwriting guides or memorizing them. It's a lot of information and a lot of products. One more InstaPivot example, this time with multiple sclerosis. We're using Iowa again for the state, so they're all highlighted in green across the top. Once we search for multiple sclerosis in the condition dropdown, the results filtered just like before. And you'll notice the pattern is almost identical to Parkinson's example. For MS, the only options in many cases are the home health care only plans, but OmniFlex will allow the limited benefit plan as long as the condition meets their criteria, meaning it's not impacting any of their ADLs currently. And for that matter, the home health care plans won't take that if they're currently if the MS is currently impacting their ADLs. The green checks show where it's okay to submit, and the red X's show where underwriting will decline. So again, in seconds, you know exactly which plans can take the client without having to dig through all those underwriting guides. This chart showing the underwriting leniency. These numbers come from, we use our InstaPivot tool to generate these numbers. The big takeaway here, in the higher the number, the more lenient the plan is. The big takeaway here is that OmniFlex is the most lenient carrier overall, and there is a reason for that. Manhattan Life uses a 5-year ramp-up design that helps prevent early claims and adverse selection. That secret sauce is what lets them approve more clients without tightening up underwriting or driving the premiums through the roof. You can see that OmniFlex's limited plan option ranks high, very high on the leniency scale, and even the full benefit version is still one of the strongest in the lineup. Wellbe Essential Care has 2 tiers as well, but both sit a bit tighter as far as underwriting. Recover Cash and Aetna's older Recovery Care plan are a bit stricter, and the new Recovery Care Choice lands somewhere in the middle. It's a little bit more flexible than the old version, but not nearly as open as OmniFlex. So if you're working with trickier health histories, OmniFlex consistently gives you the widest lane to get your client approved. Now looking at this snapshot, you can really see the power of OmniFlex's limited plan. It covers most of the tougher health conditions that many of the other carriers flat out decline. When you're working with clients that have more serious health histories like COPD, diabetes with insulin, Parkinson's, MS, rheumatoid arthritis, OmniFlex usually gives you the broadest approval path, especially on the limited benefit version, which is $100 a day for home care and $100 a day for facility care. That's still $3,000 a month benefit. Very strong. And if you ever hit a situation where you're not sure which plan might say yes, or you're trying to find the perfect niche for a tricky case, just reach out to me or Renee, our underwriting concierge, and we are happy to walk you through the options and find the best match for your client. We're about helping people here cover these risks. Anything we can do to help. Now let's talk about demand, because it has never been higher. Post-COVID, interest in long-term care, short-term care, and home health care has exploded, and it's continuing to grow. Look at these numbers. 90% of married couples will need some type of care in their lifetime. 80% of adults have never had a real conversation about planning for it. And 61% of people surveyed said they would rather die than go into a nursing home. That tells you everything you need to know about the mindset out there. Consumers are worried they'll end up in a facility, and they're waiting for you to bring up extended care planning as an option to help them stay at home or wherever they choose. So even if clients aren't asking about this directly, the need is absolutely there. You're simply stepping into a conversation they've already been having in their heads, and probably with their families too. Something, as people get older, they are worrying about this. Short-term care is the kind of solutions clients say yes to. It's simple, it's affordable, and it solves a problem they're already worried about. Now let's talk about what that means for you and your business. One married couple sold with a combined annual premium of $5,000 nets you about $2,500 in first-year commission and around $6,000 over 10 years. That's just from one application. Now imagine writing 4 or 5 of these a month. You're not just helping clients protect themselves, you're building a strong, stable book of business that keeps paying you year after year. These plans have renewals that keep paying you as long as they're on the book. And what's great about short-term care is that once you save a client money while giving them solid coverage, referrals will happen naturally. People talk. They will share those wins like that. So if you're not offering short-term care or extended care planning yet, give me a call. I'll get you up to speed and we can write these cases quickly, get some illustrations put together. I want to help you get started with this. And as we wrap up today, I just wanted to remind you all of everything you have access to here at GoldenCare, our full product portfolio, StratDecision, InstaPivot, marketing support, case design help, and our underwriting concierge. Everything we do is built to make your job easier and help you write more business with confidence. For attending today, we'll be sending your CE voucher, a copy of the slides, and additional resources. So keep an eye on your inbox for that. And I will see if we've got any questions here.
I'm going to chime in here a little bit. I know we're running short on time, but I've been answering questions as they've been coming in. Um,
Okay. I
one
see it.
good one.
I'm seeing that now. So do you want to just ask me the questions that you see if you've been keeping track of them?
Yes.
Okay.
One good one I think worth mentioning is, can you speak to rate increases for the plans? I
Rate
think this comes from the background of potentially some of the standalone home health care plans, where the ones in today's comparison do not have those planned. It's not based on age, attained age.
right, correct. These are not age short-term care are not age-banded products. It's not going to go up every 5 years as your client ages. These prices are locked in at issue age. And if you're talking about rate increases like long-term care, the risk on to the carriers on these plans is very minimal since it's capped at 1 or 2 years max. It's not an unlimited plan that can hit the whole block of business. Short-term care has never had a rate increase, an enforced rate increase. If the carriers see the need, they will raise the prices for new business going forward. But right now, the actuaries are they're very calm, they're very sure in the prices that they have. So there has never been a rate increase for short-term care, and there's nothing planned for rate increases.
Okay. Good, perfect answer. Um, the next one is, how does the home health care lifetime maximum work?
The home health care lifetime maximum works, but with the restoration of benefits. So if your client has a health incident, has a minor stroke, and needs help getting dressed and bathing in the morning, you have a home health care aide or a nurse come in for 2 months or 60 days. And then after that, all ADLs are regained, full function is regained, 6 months has passed, your benefits will restore back to the full 360-day benefit that you originally chose. You can have as many claims like that until it reaches 2 times the selected benefit period. So if you chose 360 days, if you count all the small claims that you have total, you have 720 days total and benefit. You can only use 360 at once, but total you'll have 720.
And you know what? I should mention too, if you are still unclear, feel free to call our office. We can go over it in a bit more detail, or some of our marketers may explain it just a little differently, so we can help you wrap your head around that concept. One last one, I think. He's asking about worksite sales. Originally, he had asked an easy solution for worksite sales.
So yes, Omniflex specifically is a great solution for worksite sales. It already has unisex pricing. It already has simplified underwriting where it's based on the application question. So there's not going to be any movement there or any discounts. But they do have self-enroll links that you can send out to a group you're working with. And they also have list bill capabilities. So between the self-enroll links and list bill, it would be a great opportunity for worksite. It doesn't come with the same long-term care benefits, but those are almost built into short-term care anyway. But
Okay,
yes,
that
OmniFlex
about.
great for work sites. I see a question, doesn't GTL have drug reimbursement? GTL's home health care plan has drug reimbursement, but not their short-term care plan.
Well, I did answer that too. Both are technically considered short-term care plans, which is why, it's so important how these are named.
Right.
Um, I usually refer to the home health care only plan as the standalone home health care instead of referring to it as GTL named it the short-term home health care,
Mhm.
just because it is so confusing. But yeah, the Recover Cash that was featured in today's presentation does not include that drug reimbursement benefit.
Absolutely. I think I'm going to go ahead and end it here. I don't see any other questions coming in, but thank you everybody for joining, and I hopefully we'll be talking to you soon. Have a great day, everybody.
Golden Care is always here to serve you with new tools, new products, new ideas, and new innovations, and always the best support in the business to help you succeed. So give us a call at 800-842-7799 and check out our website at www.goldencareagent.com.